All right, welcome back. In this video, we're going to cover just one of the features of the zones, min lower closes. So let's open this up. Let's take a look at our indicator and our settings. I currently have a min lower closes of 2. I default this to 1, so let me go ahead and just move that back to 1. And let's just walk through this chart. So remember, market structure is nothing but a series of higher highs, higher lows, higher highs, higher lows, higher highs, right? So it forms this sort of zigzag pattern. It's not hard to see that with your eyes, but the trick comes in, how do you get a computer to do this automatically? And that's what we've done here. So what the min lower closes does is it's going to control this move here. Now I know it says min lower closes, but that's just because that was specific to sell zones while the market's going lower, making lower lows, lower highs, lower lows. We are looking at a buy zone. So the min lower closes is going to control at what point do you allow this zone to confirm. So you can see this is our confirmation bar because it's the first bar that closed above our higher high, which was back here. If I come in here and I change this to 2, you're going to notice this confirmation of the zone shifts from here to this candle. Let's take a look. And there you go. Now, why would you want to use this feature? Well, maybe you want less aggressive zones. Maybe you want to make sure that you push well above your prior higher high. So for example, you can see this, let's take a look at this little zone here and this little zone here. If we come into our indicator and we change this to a 3, you're going to see this zone and this zone go away. And there you go. So now you're still left with this nice looking zone. You can see price gave us 3 closes, came back, and off we go. If we look left, we can see we still have great little zones over here, right? We have this zone, and we have this one. Price just goes right through here, no harm there. Comes into this guy, and you start, that's where you start going sideways. Remember, we talked a lot about the auction theory. So price had to come lower because there wasn't enough demand to support these higher prices. We come down here, and now price is in what we would call equilibrium, where buyers and sellers are agreeing on price. And then we move higher, creating a new zone, and then this is where we see the takeoff. Now, what's really interesting about this zone here is you can see these kind of overlap, right? So you kind of have 2 zones in here, creating a little bit more confirmation and a little bit more of a demand area. And this is where we start seeing the movement. So again, if you want to have fewer zones, more conservative zones, you would just increase this number. And it will work the same way for sell zones. All right, so that wraps up our discussion on min lower closes. In the next video, we're going to discuss max higher closes. All right, I'll see you in the next video. Welcome back. In this video, we are going to be discussing the max higher closes. So max higher closes, let's just make sure we understand what part of the zone this is going to be specific to. So if we look at this area, we have a move up, we have a move down, we have a move up, down, up, and you get the idea. So the max higher closes is going to be specific to this move, the retracement move. Just like the min lower closes was specific to when we confirm the zone. This is going to be specific to how deep of a retrace do we allow. So if we come in here, I need you to think of the first bar of the retrace is going to be bar 0. So you're going to have bar 0, 1, 2. Okay, that means you're allowing 3 bars in the retrace. If we want to allow for more and potentially have deeper zones, we would just, so we change this to a 4. That's going to allow 5 bars. And you can see, now we have a zone that's here. Because this is a higher low than here. And so, again, you're just allowing for much deeper zones. All right? Now, if you want more conservative zones, so say that we, here, let me hold on, let me close this. I'm going to show you something. So, well, first of all, when you zoom out like this, you can really see how well this stuff works. But what if we want to come in here and play around with this? Say we want to allow only 1 bar here. So that's going to reduce the number of zones. And then say we wanted to require this to confirm with more bars. All right, so here's what we have now. Now you can clearly see we have fewer zones, and what you also see is there's a delay in the confirmation. That's okay. Now price does not come back into this zone. Price does not come back into this one, but we do get some movement out of here, and we do get movement out of here. So by delaying the confirmation, we are getting potentially more conservative zones. We are definitely getting shorter zones, thinner zones from the high to the low. So again, this is just something to play around with. You can see how well this actually works, how well you get just movement out of here, right? I'm just randomly going through this chart. Okay? You can see almost, well, just about every time we at least get some movement. So now I want you to start thinking, imagine having a strategy that allowed you to figure out some kind of a strategic entry when price was inside of here. Pretty cool, right? All right, so that wraps up our discussion on max higher closes. In the next video, we're going to walk through just basic zones to keep and keep ended zones. So we're going to walk through these two, and then we'll keep working our way down here. I'll see you in the next video. Welcome back. In this video, we're going to cover the remaining features of the buy sell zone indicator. We're going to talk about zones to keep and the benefits of a small amount versus a large amount, keep ended zones, and the swing strength. Okay, for number of zones to keep, the only benefit to keeping a large amount of zones is if you're trying to go back in time and do a back test. So for example, if I come all the way back here, you can see I'm all the way back in 2009. Having the old zones allows me to test different strategies. So for example, say that I wanted to look at an entry strategy out of a zone. I would just need to come back here and look at when the zone's confirmed. So for example, on this one, we can see the zone confirmed here. Here is my first bar back into the zone. Even though this is not a down red bar, this bar still touches the top of the zone. And then you just need to come up with a way to enter these trades. Now, if you're someone who's looking for an actual retracement into a zone, well, then you'd want to wait for a down red bar before you look to start entering a trade, which would have been right in this area, right? Same with this. So you have the zone confirmed here. This bar does touch the zone, but if we're waiting for a retracement, we don't get a potential trade until here. And you can see this ends up being a really beautiful entry point actually. Now obviously if you're not back testing, then you don't really need to have all of these zones. If I put, let's say I want to just do 2, so this is going to keep the 2 most recent buy zones and the 2 most recent sell zones. Now in order to see a zone, you see I have to go all the way to the end. And here are my last 2 zones. Okay, so let's come back in here. Let's put it back to 150, but let me hit apply so we have those present. Now keep ended zones. What this is going to do is it's going to remove any time a zone has been canceled, meaning prices come through it. So you can see the zones that were up here, they're now gone. Now again, if you're trading just the what I call the hard right edge, which is a live market, you really don't need to see zones that have been canceled out. However, again though, if you're back testing, you do want to see ended zones so that you can actually test all of the zones that appear. So for the swing strength, there's actually an indicator inside here called swing. And so this will help you visually see what's actually going on. So this is going to mark the various swings. When we look at this zone, it's comparing this swing to this one. And you can see this swing is higher than this swing. So it's going to confirm this is a buy zone once price moves higher. If we come in here and we change this to a 1, look what happens. We now have a swing here because it only needs 1 bar. Remember, here's a bar, here's 1 bar. And this bar is higher than this one, so this is now our low for the move. Here is our next bar, right? So this is a higher swing. Here's another higher swing. Here's a lower swing. So if I were to come in here and change this zone setting to 1, it's going to go away. If I change this swing strength to 1, watch. This zone no longer exists because this swing is lower than this swing. So I don't have a higher low. Therefore, this can't be a zone. Now, there's a couple ways to think about this. By using 1, you are really forcing the market to really be moving in the direction that you're trading. So let's come back here and let's look at some of the zones that we have. You can see we really don't have a lot. But what you can see back here, by requiring a swing strength of 1, I'm really forcing momentum to be in my favor. Because the way that these swings are measured, it's not going to print a new swing until after I have a down red bar, which happens here. And then here's our next green bar, and then you're going to confirm your swing on the close of this bar. So you see what's happening. It's really forcing momentum to be in your favor here. And then lookback bars. This is all the lookback bar does is it just determines where I'm going to print the high of my zone and the low of my zone. So it's going to, once a zone confirms, it's going to look back to find the high and the low. You can see that's what it's using to draw the top and bottom of the zone. Okay, that wraps up our discussion for the buy sell zone indicator. In the next video, we're going to actually take a look at multiple time frames, and I'm going to show you all a strategy that you can employ across multiple time frames that will actually increase the size of your winners, decrease the size of your losses, and increase your win percentage. Stay tuned, very exciting stuff, and I'll see you in the next video.